Hello, traders out there in Traderland. This is the weekend edition. My name's Des Woodruff. I am the founder, president of FreeTradingVideos.com Incorporated, DBA Grok Trade. And this video is good through Sunday, May 22nd, 2011, and let's get busy. Let's first look at the S&P daily chart. We've been going up in an uptrend, higher swing highs, higher swing lows, and then we started breaking down. We start breaking down here, and on Friday, I thought we'd probably break even for the day or do something choppy. However, we did have a down day. Lower highs, lower lows. So I went from this line, which was parallel with this one, this gray line, this blue one, and now I dropped another blue one here. So in the big picture here, we have this bullish flag that now is pinching. So it's a falling wedge. The falling wedge can be a very bullish pattern. What we're looking for is a breakout to the upside. What we're looking for is to get back over the zero here on the MACD centered oscillator. And we need to stay above this trend line. It's this gray line coming up here. And that gray line, if I go back in time, I'll show you this gray line. It goes way, way, way back here into last August, September area. We come up higher and higher and higher, and we find it here in March, and that's precisely where we're at right now. So that needs to act as support if this bullish pattern is going to stay intact. So watch for that, very important. But a falling wedge can be a very bullish pattern. Let's bring in the weekly. The weekly, we have a little bull pullback. But here's the problem with this bull pullback. I want to zoom this in. I want you to really pay attention to what I'm sharing with you. We have lower high, higher low, lower low. So we are pulling back here. We have a higher swing high, higher swing lows. However, we did close below this blue trend line. You can see this trend line, this blue one coming up. I know I have a lot of lines, but bear with me. Support. We come up, 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 up. Support, support. We broke support. So on the weekly chart, we broke that support. The only thing that's holding us up right now are two shadow lines. What does that mean? Well, we come right here. We have a line that comes across, and this one actually needs to come down ever so slightly to that one. And actually, that's not acting as support anymore. It's acting as resistance. So we have resistance here, support here, resistance. But look at this other shadow line. Shadow, shadow. We come up, support. So we broke a major area support. We have that support. We also have this swing high. This is 1333. Watch that very closely. 1333 is that swing high that's acting as support. We are teetering on the edge right now. This is huge. If we start breaking down and we sustain those that movement to the downside, we're in some significant trouble on the weekly chart. So this weekly chart could just start falling over because we're in a rising wedge falling over. So I'm letting you know the daily is poised to be bullish, but it's not bullish yet. The weekly is also poised to be bullish, but it is teetering on the edge. So you have to be very careful. I will look to go long if we can blast back up over these areas here. Keep in mind, there's only 6 more days in the month here, and then we get into June when the QE2 comes to a screeching halt, and that is to be reckoned with. And let's bring in the monthly chart for the S&P, which we deem is to be the best barometer of the markets out there. And we have a very elongated rising wedge, but it's fairly parallel at this moment. But we have support down here, resistance, support. We're at resistance, an extended rally here, extended rally. And with that extended rally, has to come to an end at some point. Well, this is a very logical place for that to happen. Interestingly enough, we have a resistance point here coming across that has acted as support. We come over and we're acting as resistance, and we also have a tweezer top, and we have what's called a dark cloud cover. Now we have 6 more days, but it's going to take some big movement to the upside. But even if we do have big movement to the upside, what formation will we have? Hammer. They're not called hammers up here, not at the top highs. Those are called hanging men. So if it bounces back just a little bit, you won't have a dark cloud cover, but you will have a bearish thrusting pattern. If it goes higher, I don't care if it's red or green or purple, it doesn't matter. You have a hanging man. The only way for this to get bullish is if we blast through this trend line and we head north here, maybe towards the 1300 area. So if you don't think we can get to 1400 on the S&P, chances are we're going to pull back or at least base sideways. So one of those have to happen. And going into the end of this week, I was hedged. I have VIX calls going, but I also have a number of longs, and I did come out ahead by, I don't know, $500 or something, but it's basically break even for the day on Friday. But hedging is a very safe way of staying in the markets but being protected. And I do have a hedging course that you could look into. So look at the Dow here. And the Dow, we broke out of this rising wedge. You can see it right here. These two big dark blue lines, rising wedge. We go back in time for this big dark line. And this goes way back here. But look at this big time resistance and resistance. And I mean, this has so much resistance to it. So let's get back to where we're at right now. And that's where we smacked our head, and then we just dropped. And now we're going into a falling wedge. But the problem is we're going into a falling wedge or a bullish flag here, which are both bullish, but we're on the wrong side of this trend line. So it needs to rally and fast. So we're still making lower swing highs, lower swing lows. We're in a downtrend, so the bears are in control. But this can get very bullish. And if that happens, we should see movement here in the weekly chart. The weekly chart set up to be bullish. You have a nice bull pullback, looking for a higher high. We have a hammer for the week. I mean, we should go higher. However, I'll believe it if we make a new high. Now, the high here is 12,642. We need to get over 12,643 for me to want to get interested in being long that market. 13,000 is going to be a very big point here on the weekly to be watching for. Now on the monthly, we're at a major resistance, gang. We have right now a thrusting pattern, a tweezer top. We're at resistance at a major run up. If you come across right here, we have resistance, major resistance on the monthly chart. Resistance. I mean, we're right there. And we have a reversal pattern after a big extended run. We have the stochastics banded oscillator showing an extreme overbought condition. The monthly wants to relax. So if the QE2 comes to an end, doesn't it make sense for the markets to want to retreat? And this is a very logical place for it to happen, if it's going to. Now, we don't play it that way until we see it. And everybody needs to understand that if I call something, I put my neck out there daily to let people know that I know what I'm talking about. If you were to average my calls out for a year, if you were to average them out, for a quarter, or average them out for a month or even a week, you would see that statistically speaking, that I'm right a majority of the time. Now, you have to be very careful with having the savvy strategies and technical techniques at your beckoning call. That could actually get you into trouble. Now I'm putting on my mentor hat here, but anyway, my guessing what tomorrow might be will never make you any money. It might from time to time, but that's what gamblers do, and gamblers never win. We need to be the house, stack the odds in our favor. And that is playing what we see, not what we think. Big difference. Easier said than done, especially when you're out there on an island by yourself, trading in front of a computer by yourself. You need to be more disciplined and certainly be plugged into a group that will support you in that. And that's something that we do, and we do quite well. But anyway, let's go here to the NASDAQ. Now, NASDAQ, we're in this bull flag, but we're at a resistance point. We're dropping here. So the daily actually has a better chance of dropping than rising, but we have a major support line coming up. And if we can stay within this and then pop, we need to get over 28.13 on the daily. So remember 28.13. If we can pop up past that, we'll have broken a resistance area. Now the weekly here, is looking pretty good, but we're bouncing off into a rising wedge. Now we're still within the rising wedge. We're still at support, so that's great. We haven't broke down yet. So if this does get bullish and we get over 28.34, remember 28.34, if we can get over that, that could get bullish. But the question is for how long on the weekly, because we have major resistance. We are in a big rising wedge, and bad things could happen. The CCI is dropping as we speak, so it needs to really start heading back up here. All right, let's look at the monthly on the techs. We're at major resistance in a rising wedge. I mean, wow, the monthly looks very grimacing. The monthly just looks ominous. There's a lot of concern going into this summer is what we're seeing, on the technical side of things. And the Russells, small caps, on the daily, we're dropping. I like these lower shadows. That gives me a good idea that we could go northbound, but we broke some significant resistance, gang. So it needs to clear back through those resistance points and really get bullish. Look for 835. Write that down. We need to get over 835, and we need to get back over the zero line on the MACD. And on the weekly chart, we did break that big support area. The problem here is even the minor trend line, my shadow, and shadow coming up here, we're on the wrong side of the fence for the weekly. So it broke some ice. It's underwater right now, but it looks like a little bull pullback, doesn't it? But it's suffering at this moment. CCI is dropping really good here. And can it rally? It sure can, but it needs to get back over this resistance point or this trend line. And if it can't do that, comes up, hits its head, and drops, you will have a double top trend reversal pattern on the weekly chart, which will be very bearish if that were to form itself. Here's the monthly. Monthly looks just like all the others. We're at major resistance, we're extended, and we have reversal patterns in the making. The chances of this dropping are better than the continuation to the upside, but we will play what it is that we see. And I want to bring in the dollar. Here is the UUP. UUP has come down, 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 down. There's our lows. We rallied hard. The markets have been under pressure due to the strength of this market. We're at a resistance point. We're building a high base above the 50-day moving average. That is bullish. If it pops, we need to get over 2165, but we'll have resistance at 2193. The problem with this going up is that we'll put pressure on the markets, and the markets will go down. For the markets to continue northbound, this dollar needs to get back below the 50-day moving average and back down below the 20-day moving average. So that's a lot of information. I threw a bunch at you here, but I'm giving you the big picture of some things that we're looking at. I only have a short amount of time with you on the video, so I can't go into nearly the details I would like to do, but this will get you by. This will keep you on the right side of the fence. So, safe trading to each and every one of you out there, and thanks for being a part of Grok Trade here. See you at freetradingvideos.com or freeonlinetradingeducation.com.